What's up, traders? How have we been doing? I hope everything is going on fine. I welcome you all to this episode, uh, our weekly uh, analysis, our weekly technical analysis, as we always do, you know, for us to know where the trend is headed. All right. If you want to know the fundamental aspect of trading, I will always recommend that you go to forestfactory.com, then you see the news that is ahead. So this you will follow up with the fundamental analysis, all right? And do well to visit our site againstfx.com, join the community, choose any course of your choice so that we can train you. All right, as a trader, if you're a beginner or if you are still struggling, you still need somebody, you need a mentor. All right, for you to be able to stand on your own, you need somebody to put you through. All right, no matter your age, you don't need to fake it. Otherwise, you just be gambling. You need somebody who has been in the system to show you how to trade. All right, you understand? So that being said, the weekly technical analysis of GDP USD. Last week, guys, we were here at this point. This is where we took our entry. All right, this is where we took our entry and we were bearish up to this point before price decided to go up. It came down and something unusual happened because of the swearing in of Donald Trump. So many investors pulled out their funds. So because of fear of what the new president of the United States will say, I think that is a normal thing. A lot of sellers pulled off their capital, and at the end of the day, the trend turned from here, and we were stopped out. From this point, we were stopped out. All right, you can see our stop loss was here. At this point, our stop loss was hit. Then we were taken out of the trade. That is the function of using your stop loss order that I've already taught us in my previous video. Learn to use your stop loss order. All right. So when that happened, and I told my team, and I told them, okay, just hold on, allow this trend to run a little. Let's see what is going on. Now, what did we do? I told them, okay, since it's like this, that means we are going to be experiencing a very deep retracement, a very deep retracement. Since this level has been violated, all right, meaning that we are going to experience a very deep retracement. And why is that? Because if you look at the main structure, like I've already told us, this is the main structure. This is the major structure. All right, this is the major structure. Now we are experiencing a bullish run as a pullback. All right, as a pullback. So what we should be expecting is that we should be expecting price to run up to this level, all right, because here we have our bearish order block. All right. This is where we should be expecting this guy will be the one to now dish out a sell. All right. Because a bearish order block is the last bullish candle before price starts to push to the downside like this. All right. So we should be expecting this guy that I've highlighted here. All you need to do is to mark the beginning of the candle and mark the ending of the candle. Just shade it, trace it up to this point. Now we now know where we should be waiting for the price. But before that, when I saw price came down and created another low, it did not take out this low. I waited for it to push to the upside, broke structure to the upside again. What I now told my team, and I said, okay, once we see another push to the downside and this trend line is not broken, then we should join the trend, all right, to buy. All right. So what happened? Immediately the price came here, it touched this trend line and it bounced. I told my team, let us enter, and we entered from this level. We entered from here, all right, to push the price to the upside. We entered from here and we got 200 pips from here. All right, 7:1, that is 200 pips. We got 200 pips from here. All right, so that is why you need somebody that will teach you. And so I just told my team, I said, okay, since it's going up, it's pushing up, wait, it's now going to be a very deep retracement. Now, you should understand that forex market is not perfect. It can decide, even as price is going up like this. In fact, the people that controls the market, they can decide to push this price, continue to push it to the upside, and nothing will happen. So, but for the overall trend, we are bearish, even though you are seeing this push to the upside and we are bullish like this. After these 200 pips, I told them, let us take our profit. Why? Why did we take our profit here? Because as an SMC trader, like I told you, we trade two strategies. One is hands off, the other one is hands on. Now, why is it hands off and why is it hands on? If you don't know, go and watch my previous video. Now we have identified this major trend, all right? And there is this bearish order block here. So we are waiting as an SMC trader. We have already placed our sell limit order here, waiting for price to trade up to this point, trigger us in like this. As we are going up, waiting for price to get to this point, trigger us in, then before price we push to the downside. All right. Now, why did we choose this level? We choose this level because if you now use our other strategy, bring out your fib, take the 100%, click the high, push it to the downside where you have the 0%, drag it, then you leave the Fibonacci 2. What happened? 69 7 I beg about 79% is right here. So price has already broken the 79% a little. Then here we have the 100%. But because here we have the other block, now any moment from now, we are waiting for price to push, at least push up a little to tap us in before it resume bearish trend. Okay. Some people might be asking, why didn't we enter from here? Because we see price already retracing from here. If you enter from here, where will you put your stop loss? Your stop loss, like as I told us, usually is always supposed to be above structure for it to be safe. You cannot enter here and put your stop loss here in the middle of anywhere. No, it's not safe. So what we should do, your stop loss, like as we have already done, all right, even though we're on this trade, I already told my team, put your sell limit order here, that is a pending order, put it here as an SMC trader. We have already set a pending order here, and our stop loss is a little above this structure. All right, our stop loss order is a little above this order, a little above this structure. Then we are waiting patiently for price to push to this point. All right, but if price now decided to begin to come down from here, then we'll allow it to come down. Then if there will be a pullback. Once it gives us a pullback, if the pullback did not take out this high, then you enter to sell the market. So, but we are waiting for price to get to this point because what will triggers the sell is here, that is supposed to dish out sell. All right, this other block is what we dish out a sell before this price will turn and resume the underlying bearish trend. All right. So it's not a magic. Everything is all about analysis, and you should trust your strategy. So this is the analysis for this week. We are still bearish, even though you will see a very deep pullback. All right, a very deep pullback. All right. Now, when price came down to this point, and I told them, okay, let's bring our fib tool out and let's just do what we know how to do best. We took our fib, we measure it, put the 0% here, all right, 0% here, and what happened? This first TP was hit, first TP was hit. This our TP1, then this is TP2, this is TP2, that is negative 61, negative 27 was already hit. You can see when it got there, he made a retracement, a pullback, created a support to now break the structure up and hit the negative 61.8. But before he even touched the negative 61.8, I told my team, let us take, because it was already, the time was already late, all right? And I told them, all right, because it's Friday, let us take profit. So we now took profit from here because we have already set another pending order, a sell limit order, all right, the pending order to now join the push to the downside once our order is triggered. So we don't have to worry again. We have already made profit. So 200 pips straight off. Then we are now waiting patiently for the price action to now break this structure again because it has already created a high and it's pushing down. It needs to hit this uh, TP2, then push up a little, then trigger our order before it starts to come, before it resumes a bearish trend. All right, but however, Should this push to the upside break this strong high, then we now know that we are now bearish. We are now bullish, I beg your pardon. Should this push break this high, break this strong high, all right, then what you should be expecting is a retest. Once the retest is once it creates a retest, then allow it to break structure to the upside, then it will now come down, all right? Then this is our entry to start pushing the market to the upside. I hope it's very clear. If it's not clear, I will repeat so that you will understand. Because the most important thing is understanding. All right. Now I'm saying that this is a strong high. All right. This is a strong high from the major trend. All right. If this trend should break this high, if it should violate this high, then what we should be expecting after a run, a bullish run, then there will be a pullback to retest this structure. Now, what happened? After he has retested this structure, now we'll wait because now he has created a high, right? Then we will now wait for price action to break this high, to break this structure. I beg your pardon. We'll now wait for price action to break this structure to the upside, to break this structure, to break this structure to the upside. Don't enter yet. Now he has created a strong low because he has broken this high. Then you patiently wait for a retracement move. Once the retracement comes down and it did not break this level again, this is our entry. We now start to push. They will now join the bullish trend to start pushing the price to the upside. I hope this analysis is very, very clear. So at this point, you don't need to do anything. Wait for it to create a high, a pullback to retest this structure, this strong high that he has already broken, this structure that he has violated, he will come back to retest it. The price will now break this structure to the upside. Don't do anything. Allow price action to come back, have a pullback. Once there's a pullback, and you now notice that this pullback did not violate this level again, because price can come down again after breaking this, come down again, and it start pushing deeper down. So what you need to do, wait. Once price action creates a low that did not violate this one, then this will now be tagged as a strong high. Why? Because it has violated this high. So here will now be our entry to now start to join. We'll now enter from here to join the bullish trend. We now know that we are now completely bullish. The trend has changed. We are now bullish. We are no longer on a bearish trend. All what you'll be experiencing now, starting from when the structure is broken and a retest is confirmed, you just be seeing a break of structure to the upside, a break of structure to the upside, a break of structure to the upside, just like that. So we now know that we are now completely bullish. All right. So at this point, all we should be expecting now is for price to trigger our order so that we can now start to for price to resume the underlying bearish trend. So guys, thank you so much for watching this episode. Stick to one strategy. Subscribe to my YouTube channel. Go to our site, choose any course, any package of your choice so that we can train you. Share my video, like, and drop comment. If you have any challenge, drop comment. Thank you so